Let's bring in another guest into the hour here. We've got George Gianrikas, Canaccord Genuity Managing Director. George, let's just build on those comments from Pras. What's your sense right now on why the stock has pulled back so significantly? Is this about the street just simply saying we don't necessarily buy this story that demand's going to stay strong in Q4?
Well, first, thanks for having me. And I think Pras kind of nailed it. Look, it was an issue where there's a little bit of double speak, where on the one hand, for the first time that I can remember, and I've been looking at the stock for a long time, Elon Musk acknowledged that there was a demand issue, particularly in China. And if you guys remember, several years ago when someone asked about demand, he called it a boring question, right? So this might be the first time where we actually acknowledge a little bit of a downtick. But at the same time, he said the company would grow significantly in Q4, and we think they could do about 450,000 deliveries. And then they're going to sell as many cars as they can build for the foreseeable future, which is about 50% year-over-year growth as far as the eye can see. And so what we did is, we thought about how we can square that circle. And for us, it came up to a couple of things. First, the company has had backlog for a really long period of time, and they're probably going to drain a little bit of that in Q4. There are some fleet sales to companies like Hertz that they could maybe sell in Q4 that help. And then when you look into 2023 specifically, the Cybertruck comes online, and that really helps. They start producing more in Austin. They have Tesla semi sales. And then beyond that, hopefully we're out of this economic funk that we're in currently. And EVs, if you remember, are a really, really, really small percentage of overall sales. And so that will start to help. So we think there's method to the madness, and there's logic as to why, he guided them to grow significantly this year and continue their growth into next year. But I completely agree and understand there's too many breadcrumbs that indicate that there's been a slowdown in demand, and even acknowledged it on yesterday's call.
Hey, George, Pras again. So I just wanted to talk to you about a couple of things that sort of struck me last night in the call. You mentioned the Cybertruck, how they're going in the tooling phase for a potential sort of, production start in mid-2023. But also you mentioned the cheaper Tesla, the kind of entry-level car that would potentially be half the cost or something like that versus the Model 3. What did you think about that? Because they actually kind of sort of confirmed that this is actually in the works.
Yeah, so on the Cybertruck, it's one of the things that may give the company a lot of confidence in growth in 23 and beyond. Because, look, I'm pretty confident that the company won't keep the pricing that it discussed last time when they first introduced it. But remember, they had millions, according to the press, millions of orders for the Cybertruck, starting in 2023. And so even if they have a lot of cancellations, that's a lot of demand. I personally would get one if my wife let me, but she told me she would be dead driving it. So it's clearly an acquired taste, and a lot of people really like it. On the robotaxi platform, it's a really interesting question, and so basically when you think about the company's ability to bring down the cost of production per vehicle, they've done a really, really marvelous job with the Model 3/Model Y platform, which costs about, somewhere in the mid $30,000 range to make. And when it comes to robotaxi, that's another step down in production cost. Now, granted, it won't be as big of a vehicle. There'll be a lot of nuances to it. Probably won't have a steering wheel and some odd stuff like that will enable autonomous driving. But it's another platform through which the company can reduce costs and help EVs proliferate the globe.
George, in terms of potential for buybacks, it sort of felt like Elon Musk dangled that carrot for investors who have been a little jittery around the stock. He said $5 to $10 billion is certainly possible. These were his words for next year. I wonder what you make of that. How much of this is about trying to get those investors to stick it out, those who have been concerned about his distractions with Twitter? And is this really the best use of capital for a company? Should that be used towards more CapEx?
Just to be blunt, we don't like it. Buybacks are things that companies like newspaper companies do, not Tesla, that has significant opportunity in front of it. We think there's better use of capital to accelerate CapEx plans, to build cars, to build the robot army that Elon Musk wants to build. It's just, in our opinion, there are just better ways to accelerate their plans around, having EVs proliferate the globe, and other opportunities, including, battery factories and robots. So Look, I'm sure that they've done a lot of math behind it, and they want to see this, support the stock down here in the 200s. But we think ultimately, long term, the best way to support the stock is to grow for as long as you can.
George, we didn't even get to ask you about the valuation. And Elon Musk calling for, he said valuation for Tesla could equal Apple and Saudi Aramco combined. But that's for another conversation. We're out of time here. George Gianarikas, Canaccord Genuity Managing Director. Our thanks to you, and our thanks to Yahoo Finance's Pras Subramanian.